Hello and welcome back to Volatility 411. I'm Kevin Davitt, part of SIBO's Options Institute, and it's Monday, November 29th. Now last week, the S&P 500 declined by 2.2%, driven almost entirely by Friday's sell-off. The VIX index moved up by just over 10 handles during the holiday shortened session. In percentage terms, it was the fourth largest one-day move in the VIX index ever. The VIX ended the week at 2862. It was the highest weekly VIX close since January 29th of this year. This morning, markets have found some footing. As I stand here, the S&P 500 index is higher by about 50 handles. Now on Friday, the broad market was lower by just over 100 handles. The VIX index is down about 4 points and measuring around 24.5. The December VIX futures are trading around 23, and the Jan futures are around 24.60. So the VIX index is above the month one futures, but the term structure remains in contango. As a reminder, SPX and VIX options are now available to trade nearly 24 hours, 5 days a week. And speaking of VIX options, shortly after the cash market open, the standard December cycle 60 and 65 strike calls were trading actively. 11,000 of the 60 strike calls traded, 53,000 of the 65 strike calls traded. Big picture, there is significantly more uncertainty in the markets relative to a week ago. Now in the coming days, we ought to get a better sense of the potential threat posed by the Omicron variant. In terms of economic data this week, we'll get Chicago PMI and consumer confidence tomorrow, the ADP employment data, ISM and Beige Book on Wednesday. Thursday is the regular weekly jobless claims, and then Friday is the monthly jobs report. It'll be interesting to see how the Fed responds to a potentially strong jobs number mixed with the uncertainty about the new variant at their mid-December meeting. That's Volatility 411 for Monday. Thank you very much for tuning in.